Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we're going to go over some economic data that hit at 8:30 in the morning Eastern Time. Again, generally it was okay except for GDP and the GDP price index. GDP coming in at negative 0.5%. So let's throw that up on the big board here. You can see it below me. GDP for the Q1, this was the final reading for GDP. It came in at minus 0.5 versus minus 0.2. So a weaker economy in the first quarter. Now, the key here was a weaker economy, but look at the GDP price index. All right, it was hotter than expected, coming in at 3.8% versus the 3.7% expected. Now, the kicker here is that ultimately a weaker economy with slightly higher inflation raises the worry again of, do we see stagflation? It's one of the things that Jerome Powell's been saying over the last couple days of testifying, is that generally we haven't seen that uptick in inflation, but we need to see a couple more months before we know for sure. All right, other economic data that came in here, jobless claims coming in at 236,000 versus the 244,000 expected. Again, those are people filing for unemployment. Overall, that's an okay number. It's not amazing like it was 3 months ago at 220,000 people only filing, but at the same time, it's not north of 250,000 just yet. And lastly, durable goods orders came in this morning. Durable goods at 16+% gain versus the 8.6% expected. So that's a very strong number, but the core, which removes aircraft, all right, that only came in at 0.5%. versus 0.1% expected. So listen, core was still better than expected, which is good. But again, notice how when you remove aircraft, now you might say, well, why is there such a difference when you remove aircraft? Because remember, China canceled a bunch of their airline purchases when Trump initially put the tariffs on. Then in the last month, basically when China and the US made a deal, they said, okay, well, we'll end up buying those aircraft. So you saw a big uptick in aircraft purchases just in the last month, essentially. And that's why you're seeing such a kind of a wacky number on durable goods as a headline, but you also got to take that aircraft out, and then you get a more realistic number. All right, so that's where we are here. Let's take a look at the S&P 500 chart this morning. We are up on the day, but we are coming back in. Now, this candle right here in the pre-market, and we're looking at the 10-minute S&P futures chart. This candle was where the GDP number came out, which was really the big deal of the morning. The GDP number, weaker than expected, and the GDP price index. Now, listen, the GDP price index is not as important as tomorrow's PCE data. The PCE data is the favored gauge of inflation by the Federal Reserve. But we can still see that the markets were basically at the highs of the morning, and then we got this PCE data out, or I should say the GDP price index and GDP final reading, and we have started to see a little bit of a fade. So again, overall, if we look at where we closed yesterday on the S&P futures right here, or that's where the stock market closed, we are up about 20 points or so, maybe a little less than 20 on the S&P futures, which would equate to about a 20-point gain at the open if we hold these levels. But again, that's not a huge gain, but it's just continued grind in the overall markets. Now let's flip over to the S&P 500 chart, taking a look here. So what do we have here, folks? We have the S&P 500, and we know there's a couple key trend lines. So number one, this trend line right here. This is that upper part of the wedge pattern that I had been drawing in. And I think this is an amazing trend line, right? Because if you look at it, price is still acknowledging it. Now, this is not the scene of the crime retrace. Remember, we went over that yesterday. The scene of the crime retrace is the more important one. But you can't deny that price from this high to this high to this high, and look at how price here closed on the line. Yesterday, we opened higher, but then closed back below. And today we're setting up to open a little higher as well. But let's follow where that closes on the S&P today. All right. The line to me for today would be around 6,100. Give or take a couple points, and obviously I'll review it in the next day's game plan. All right, now if we look at the underbelly of the S&P, essentially the wedge pattern, this is the more important line right here. Okay, now I say this is more important. Why? Well, because this is the one we actually broke down from. So I'm going to change the color on this so it actually pops out a little bit more. Let's go to this color here. All right. So essentially, we can see as I went over in yesterday's game plan, upticking, you can see price respecting this level over and over again, breaks down, little retrace into it, pulls back. And now if we push up, that's your next level, which currently sits, if it were to hit today, it would actually be around 6180, give or take. But remember, it's upsloping, so it goes up a little bit each day. So those are ultimately the big ones. Obviously, we have the former all-time high on the S&P, which is kind of right up in that same zone. So again, that would be your big level. But still, let's not discount this one. Maybe this one, again, is powerful enough to push the markets down. I kind of doubt it a little based on the animal spirits in this market, but let's continue to follow it in the near term. All right. Again, the QQQ did make a new all-time high, but again, is still underneath both key trend lines of the wedge pattern here. You have the upper trend line right here, which it kissed at the highs yesterday. And then we still have the scene of the crime retrace. And again, just to simplify it here for those of you that may have a little trouble understanding the trend lines, here's your trend line. Hits here, here, and here, right through these lows. We broke, consolidated. Now we're pushing up. The expectation here in general, and I'm just speaking from probabilities, right? Probabilities would dictate that in general, you go back to that line and then you get your bigger move to the downside. So again, that's in general probability-wise what usually occurs on charts. They break key levels. They go back to home base. Think about it like a kid going off to college or university. They come back for Thanksgiving or they come back for Christmas. They come back to the family house. They have a great meal. They spend time with the family, and then off they go again into their life. They're in their adult life essentially. Okay. The dollar today is breaking lower, so we can see the breakdown potentially is starting on the U.S. dollar. We've talked about this kind of megaphone pattern. A megaphone pattern, all it means is it resembles a megaphone, right? So you have an ascending trend line and a descending trend line. They're getting further and further apart. Price respects the lower end, the higher end, the lower end, it bounces, and then here it's breaking to the downside. So essentially, when you get these patterns, you basically respect that it's stuck between them, but at some point you look for which way it breaks, and then you usually get a bigger move in that direction. In this case, it's looking like we're breaking to the downside, but again, we need to see confirmation. Now, if it does continue down, where would first major support be on the US dollar? Right in here, guys. This is a great level around $94, $94.50 on the DXY. High pivot to high pivot, right in there. You can even see right here how you broke out, you retraced to the scene of the crime, like we've just talked about, and then you went on your big move to the upside. So it's almost like the S&P is doing the inverse of this potentially on that wedge pattern breakdown and then retracing to the scene of the crime. This, again, would just be the inverse of that. Continues to hit, breaks down, pulls back, hits again, breaks out, retrace. Here's the scene of the crime retrace, and then look at that move to the upside. 10-year yield is also breaking lower today, potentially confirming this break. Again, my target that I have given you guys is at 4.13. I still anticipate that being the target to the downside. Micron reported earnings yesterday after the bell. The stock initially popped, then came back in, then kind of opened in the pre-market a little bit higher and has faded. All in all, it is slightly green. But remember, I gave you guys the insights yesterday. I said, listen, it's very unlikely that Micron will be able to push above this level. Gap fill, pivot low, and then these lows right in here, huge resistance. And really what you could do is you could extend this even out here to this zone over here. And what we saw is initially on earnings, sure, it popped initially on the 10-minute real quick through that. And then look at how it's come back in that zone. This is the same zone on the intraday 10-minute chart that we were just looking at on the daily chart right here. So again, you can see how extended the chart is. So it's already factoring in amazing earnings. And by the way, their earnings were really, really, really good. But again, what was factored in when you rallied from $60 all the way to almost 130. A lot was factored in at that point. Couple other stocks that continue to show strength. We have AMD. A lot of these semiconductors have been powerful movers. AMD again continuing to push here. If we look at the pre-market, it was up, although it is starting to fade just a little bit here in the early session. And then we can't not mention Nvidia, guys. Nvidia did break its all-time high. I do have a secondary level here that I think will be epic resistance, and you can see it right here. So let's remove this line for now just to keep it simple. And if we take our arrows, we can say, okay, major high pivot, and then look at the pullback. Major high pivot and high pivot, look at the pullback. Again, major high pivot, look at the massive pullback. Is it possible we're going right up here in the next week or two? And would that then be a major resistance level, right? And again, all we do here is use charts to our advantage to basically give us key levels. The idea being is you rally up into that, and then that bigger rejection potentially comes back in. And listen, that's only at 162 to 163. So it's only, from yesterday's close, that would be about an $8 to $9 rally higher. Now, this morning, NVIDIA is higher on the day, but just like all the rest of the semis, we are seeing a little fade here after that economic data came out. All right, flipping over to commodities, gold is down, ticking just a little bit today. In all fairness, gold probably at least needs to tag this level. But for me, I'm just sitting on the sidelines on a swing trade basis here. No exposure to gold whatsoever, because really what I'm looking for is, well, which way is it going to break? You have this down-sloping trend line, this up-sloping trend line. Depending on which way it breaks, that's going to be its next major move. Now, if it breaks to the downside, there'll be a little bit of a stop point right at this low here. See this little pivot and this former pivot high. So really right around, 31.25, 31.30. If it continues, then this would be my buy level right down here at just below 3,000, 29.70-ish, give or take. I would expect a big move back up. All right. Now, if it breaks out, okay, well, we're probably going to, I would guess close to 4,000. And listen, longer term, I think it's going to 4,000 and then 5,000 anyways. It's just more, well, what is it going to do in the short term? It doesn't need more time to digest the massive move up that we've seen in gold going back to when it was trading in 2022 at $1,600. I mean, think about that. Gold since 2022 in less than 3 years has gone up over 100%. That's very rare historically in gold. So it may need to consolidate just back to the 3,000 even number right here. Now, silver, you guys know I've been bullish on based on the breakout. I just haven't rebought because it hasn't given me an opportunity to rebuy down here after I unloaded my long up here. But nonetheless, today it's up fractionally. It is pulling back a little bit. We'll continue to monitor it. But still, listen, like I said to you guys before, I have no problem missing trades. I miss trades every day. There's always another trade coming around. So it's either my price or no price, right? And by the way, even when I get my price, is it always the right price? No way. No way. But again, how do I mitigate that risk? What do? Well, I don't start with a full position. I say, all right, well, I'm willing to put, let's say, $1 million into a trade on silver. So I'll start with, let's say, 250,000. If it goes against me, I can add another 250. If it goes against me more into the next major support, I can double up again and add that final half position to bring it to $1 million at that point. And generally, based on technical analysis, if you have a 70% success rate at this level, another 70% here and here, one of those is going to get the bounce, right? Again, it's very rare. Occasionally it doesn't. But it's very rare that when you have 3 major levels, that at least one isn't going to have the teeth that is going to ignite that bounce in the chart. All right. Quickly, we'll go through oil, then we'll get into Bitcoin. Oil today is getting a small bounce. Like I said, I was short up here. Now I went long down here. And again, I couldn't care less what's going on in the world in regards to the trade. It's the charts that matter, because when you pay attention to the news, what do we end up doing? We end up saying, oh my goodness, this could get so crazy in the Middle East, And then you're like, oh, well, I better not short up here because this could go up. And I guarantee a lot of us thought that way, right? But when you follow the charts, you do short at these levels and then you make money. And now we go long. And listen, there's no guarantees this will work out. But like I've said, I'm expecting a bounce back to 68-ish, give or take. And then I'll just grab that money and step back to the sidelines again. Natural gas real quick here. See what nat gas is doing. Wow, nat gas continuing to go lower here, folks. This is impressive. I really thought we'd get a small bounce here. Again, it wasn't a level I was going to buy. As I explained to you guys, the risk reward wasn't here, but I still thought we'd get at least a small bounce. We're not getting that. And again, the question then is, are we heading all the way down here? Or maybe this pivot or this pivot down here gives it a small bounce. The point being is that for me, if it continues to sell off, yes, I would buy here. If it does its thing, I'll have to reevaluate at that point. And then lastly, Bitcoin, guys. Bitcoin did fight back above this upsloping trend line, and now it's pulling back just a shade. Resistance remains just below 110,000. Only minor resistance, mind you, but resistance nonetheless. Major resistance would be about 113,000. And then really support still remains right here at 100,000. And then if that breaks, we're looking at 95 to 93,000 on the chart of Bitcoin. All right. So really, when all is said and done, this market continues to, in many ways, be full of animal spirits, right? We've seen so many headlines that could trigger sell-offs, and the market has almost become immune to them, right? I mean, the tweets or the social media posts, by Trump, whether it's attacking Jerome Powell or whether it's a trade dispute or whether it's, attacking, a social media attacking Iran or even an attack on Iran's nuclear sites. The market generally ignores those, which tells me that euphoria is obviously at hand, right? You're having the animal spirits, aka euphoria, in the market. To me, is that a warning sign? Absolutely. It doesn't necessarily tell us where it's going to end, but that's where we go to the charts and we look at, okay, well, we have the retrace to the scene of the crime at this level. Let's watch and see how markets behave off those levels. All right, guys. So as always, I am here for you guys, and I'm going to continue to give you my insights. Don't forget, we're running the Winning Trader Series sale right now, 55% off. It's everything that I know, everything that I teach, everything from 26 years of teaching. And also, by the way, our other courses are at least 50% off as well. Those sales will end on Sunday, so just a heads up. Get it while you can. After that, the Winning Trader Series goes back to 10K. So again, it's that one last chance here. We are already on Thursday. You got a few days left to take advantage if you want to learn this stuff. And again, that course will rock your world. You guys have a great rest of your day. Thanks so much, and I'll talk to you soon. Take care.